All right. Welcome to Clarity Sessions with Bill Fauth, where we cut through the noise and bring you real, practical clarity on money, business, mindset, and everything in between. Now, if you're a mompreneur, a business owner, or someone who's just ready to take more control of your financial life, this is your space. No fluff, no overwhelm, just simple, powerful insights you can actually use. Because let's be real. When you got the right clarity, you make better decisions, and better decisions lead to a whole different life. So let's get into it. Today's question is,
can someone deduct a home office if they're working from their kitchen table?
The short answer is yes, you can deduct a home office expense. But the idea is that if you don't have a separate place that's dedicated exclusively for business, but the IRS has some rules around that. And this is one of those things where we go about what the IRS at the audit level rules are and what the tax code says. The tax code says ordinary necessary expenses for the production of income are deductible. And the idea that if you're sitting at your kitchen table and it's also used as a place to eat with your family, but you're also doing your business there, then it becomes a mixed use type of assets. So the IRS has created rules that says, and I find this big, I have a lot of clients that are in New York City where it's apartment style living, and by definition, where they're living and where they're working is the same. So what happens is when we get to an audit level, they're going to say, if the rules say that it has to be a room that's used exclusively for business. So if you have like a 2-bedroom apartment and you use one room for business, it's clearly deductible. Then the rules say, okay, you can do it on a percentage of square footage of your house or your apartment, or you can do it based on the number of rooms if the rooms are substantially the same size. But typically we're claiming 10, 20, 30% of a home office deduction as part of the expenses. So the expenses associated with the home. So what expenses are associated with the home? Your rent, if you're paying rent. Your utilities, if you're paying the utilities. Those would be deductible. So the idea is that we need to open the door that you're using your business, for your living space, partly for business. Now the IRS is going to say, since it doesn't follow our rules, you're not allowed to do that. And then we go back and say, well, that's what it says at the audit level. But when we go to the tax court level, the idea is that it's not in the tax code that you can't do that. The issues of evidentiary procedure and what is considered evidence and oral testimony, and again, there's got to be there's got to be a reasonable basis for taking the deduction. So sometimes we have to push back a little bit, but the idea is that for most people, if you're doing it at your kitchen table or you have, again, a separate room, I've had clients in the city where, during the business hours, they put up a partition and it's separated and they take pictures of it and it's proof that it's a separate space. And then at night when they're using it for personal use, then it's like that. And we take, a third of the expense as a business expense. The other thing is that, the IRS, chances of getting audited are very small. And the idea, if they do get audited, you want to have a reasonable basis for taking the deduction. So sometimes the idea is that if the deduction is not worth the headache or possibly, it's not going to give you enough bang for the buck in tax saving, why bother with it? And particularly if it's going to increase your audit risk. But the idea is that you don't want to avoid taking the deduction if it's going to help you, if it's reasonable. But the idea, we just might have to fight for it.